It's 2023. It's 2023. The economy is slowing down in Kenya, in Africa, everywhere, but in Kenya it's even worse because the Kenya shillings has been falling. Why? Because foreign investors are fearful. They are still not back in the emerging markets. They're not sure what's going to happen. Things have been so volatile. Everything is so wrong. You know where people are going to? People are running away from stocks and into bonds. So most of our companies do not have any foreign investments, and this is making Kenya shillings go poo 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 poo. Everything is just not right. Now the sad part is that instead of our government discussing all the serious issues about rebounding the economy, protecting the Kenya shillings, making sure that everything is fortified for a rebound, they are busy politicking and talking about nonsense. Just yesterday I saw Jerome Powell, the chairman of the Federal Reserve of the United States of America, being questioned by the Congress. It was Pelosi was questioning him. I'm not sure I can pronounce the right name, but yes, he was being questioned, and you know what, it was such an intense situation. He was saying, for us to control inflation, what has to happen is that 2 million people are likely to lose their jobs for us to fortify things in the economy and control the inflation, right? I'm not going to talk about the politics of that and everything else, but I'm going to say that when these people are in session, when this parliament are in session, they are busy discussing issues. The other day in the UK, it's been an ongoing discussion on how to protect people are working, protect the economy, rebound the economy, protect the manufacturing companies, protect exporting sectors, basically protect workers. It's all about let's protect the economy. Let's make sure that this economy is going to rebound. Let's make sure that people are going to be able to borrow still. Let's make sure people are able to, to buy houses, to invest, to do 1, 2, 3, and to live a normal life. They're discussing living costs, inflation rates and how to bring it down, all these things. Then you open our parliament and people are discussing politics at a time when we just elected our leaders. So it's sad, but I don't want to get into the politics of it. Yeah, I'm a politician, trust me. I know a lot about politics, too deep. But I don't want to get into that right now. What I want to tell you is, this is a good time to invest. But what do you want to invest into? Not stocks. I love stocks myself. I invest in stocks. Even right now I'm investing in stocks. But in Kenya, you want to avoid stocks for now, for sure. Keep off those things. I'm not saying run to buy land. Not now. I'm not saying run to buy real estate unless you have cash. Not now. Debt is quite expensive right now, so you don't want to go and buy house on mortgage and stuff like that. What do you want to invest your little money in? To reserve the capital that you have, reserve the little that you have so you don't lose it, but still make money off it. So you want safety and security, but you still want growth. There's only one place you can get this, all these things together. And it's one of the best investments we are blessed with in Africa and in Kenya, because we are a developing nation. We still need a lot of borrowing, and our countries, what do? They borrow domestically. Especially right now, when Ruto is saying we want to borrow domestically, we want to make sure that our money is coming from the country, even though it has its risks, because then you can also your bonds can be downgraded by the international community. But we're gonna ride on the safety that this has not happened. Okay, they have downgraded our bond, but it has not affected the market as much. That has happened before, but we're going to also be on the safe side that the government has always paid its debt, okay, to its people. The best investment you want to make right now is bonds. Now, just yesterday or 2 days ago, they closed a bond, which was an infrastructure bond, at 14.3%. Listen to that. Tell me which investment right now. We guarantee you 14.3%, almost 14.4%. Tell me one investment apart from business. Of course, you can do business, and business is based on how good you're performing and all the other factors that make a business successful. I won't argue with that. So a business can give you -20, can break even, give you 10% return, can give you 100% return or 200% return if you're doing, like, let's say, drop shipping and stuff. So business is out of it. But tell me any investment which you are not part of and not involved in that will give you steady 14%. Your principal amount is not touched, it's not in any way interfered with. Your money is secure, it's safe money. You will always have liquid cash, it's cash flow. It's money that you are being paid. Tell me one investment right now that has all these qualities. Not stocks, because stocks in Kenya have been performing terribly in the last few years, and of course last 2 years. And of course, we do understand the economy has been terrible. Even where I invest, even in the West, stocks are terrible. They have been terrible in the last 2 years. They have just been like, today is up to 1%, tomorrow down 3%, the other day up 2%, the other day down 10%. It's just been a rigmarole, or whatever it is. What I want to tell you is that this is the best time to now put your money in bonds. And imagine a 14% return on bonds, guys. Imagine a 14% return on bonds. That was one of the best bonds ever floated. And the best part of it, infrastructure bonds are tax-free according to the laws of the land of Kenya. So if you are getting 14.3%, it is 100% your money. If you depending on how much money you are investing, and you should be investing, I believe the minimum is 50,000 unless I'm forgetting, but 50,000 is the minimum, should be the minimum. You can check that, not 100, 50,000. And you can always invest in multiples of 50,000, right? So depending on how much money you have, you can imagine the kind of returns you're getting. The bonds, they pay you twice a year, so they pay you after 6 months. So if you have one bond, you're getting money 2 times, okay? If you want steady cash flow, you just need to do what we call bond layering. Just layer the bonds on top of each other. So one is giving you 2 months covered, right? 2 months, done. Another bond, you buy another bond, another 2 months covered. That's 4 months in a year covered. Another bond, another 2 months covered, 6 months covered. So you just layer them such that every single month you have some money being paid to you. But that is if you are investing for the long term, you're very advanced at investing. But for those who are just starting right now, I'm just telling you, forget about stocks for now. Forget about the being cool and saying, oh, I own stocks, because you feel it's a good thing. Focus on buying things that will give you safety and security and growth. We are even expecting that interest rates are still gonna go high. Imagine from 14%. What are we looking at? Imagine after 14%. So we're looking at 16%, hopefully. Fingers crossed. And if it is, guys, I'm gonna be in, and you should be in as well. Now, I know the risks that come with this as well, so you don't want to pack everything, but I already have stocks invested. So bonds always for me is a diversification. Make sure you're investing in bonds in 2023. Is the best investment you can make. And infrastructure bonds do come out twice a year, and sometimes, unless they have a tap sale, which is like a resale of a previously opened bond which did not meet target, they will always come out twice a year. So the first one has come out. If you missed it, it's fine. The next one around September, this was actually oversubscribed, so you want to look out for the next one. But before that, in between there, you can be parking your money in a money market fund, for example, or somewhere else, in an investment somewhere else, but you must be getting ready. Now, you also don't have to wait for that long. What you can do is simply start investing in treasury bonds that are released every month, right? So there will be a treasury bond every single month, and with good interest rates. So even if you're getting taxed out of it, you could still go home with 13% equivalent, 12%. That's still a very stable and good return. So depending on your strategy, your goals, make sure you start investing in bonds this year in 2023. This is the best investment you can make. Now let's look at the bond that was released the day before yesterday. So this is the bond, results of 17-year treasury bond issue number IFBI 2023-017, dated 13th of March 2023. The auction outcome is as summarized below. Due date 20, this is when you get your money back, 2040. So if you invested 1 million, this is when you get your money back. The total amount offered was, they wanted 50 billion. So the government was trying to raise 50 billion. The bids that they received were 59 billion, and the performance rate was 119.5%. That's the performance against the bond that is raised, okay? Amount accepted, they accepted 50.8, that's 50 billion. Competitive bids, which is where most people fall, 40,000. These ones don't matter. What you want to see is market weighted average was 14.4%, and the coupon rate was 14.4%. 14.4%, guys. This is amazing. This is the money you'll get. Redemptions, don't worry about all those things. But anyway, this is proof that what I'm saying is true. People are getting 14.4% return on the bond. Crazy, right? Forthcoming treasury bonds issues for the month of April. Wait for that to come. Okay, this will be a normal treasury bond. Now let's do a little bit of calculation here. So let's say you decide to have at least 1 million in bonds. I'm assuming you've accumulated money somewhere, because I always say don't put too little money in bonds, because you're gonna be fixing the money for a long time. You don't have to put like 100,000. You can, of course, but in my advice is that we have opportunity to use that money to compound more money. Put the money in a money market fund somewhere, compound more money, and then put it in a bond, and then you fix it for a long time. Because for bonds, you want to use it for cash flow. You want cash flow, and cash flow with 100,000 won't be a lot of money, right? But you want good cash flow. So let's see, this is 1 million, so let's just times that by 0.144. That is around 144,000 per year, and it's 100% your money. If you divide that by 2, you get your 72,000. So with 72,000, that is every 6 months you're getting 72,000. That's cash flow. That's cash flow. If you want to look at it in terms of monthly, this is going to be around 12,000 Kenya shillings. 12,000 monthly. That's free. 12,000 is basically free cash flow. That's how you make passive income. That's how you have cash flow. That's how you build cash flow. So you can say 12,000 isn't a lot of money per month on my 1 million, but think about it. 1 million is very little money, by the way. Thinking of the economy right now, if you're getting 12,000 off your 1 million for 20 years, that's going to be a really, really good investment. Now, all you need to do is build it up, have more money, and then start saying, okay, I want to earn at least 200,000 from bonds. So if you want that, make 10 million, right? Which you can. Don't tell me you can't. Multiply that by 0.144. I know somebody say, oh, can this one realistic? 10 million is too much. If you think it's too much, you won't ever make it. Right? So with that, you're getting 720,000, and then divide that by 6. That will be giving you 120,000. Not bad at all, right? Anyways, what I'm trying to show you is that you can use this to make money. You can use bonds to make money. The best investment of 2023 is bonds, and especially if you're in Kenya, you're in Africa, this is the best time to invest in bonds. See you next time. I'm out.